What's up, everybody? Chris Dover here, head systematic trader here at Macroops, and this is our weekly market overview. I'm just going to go through my process, boom, 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 top down, how we take a look. Uh, just as a primer here, this is systematic trading. There is definitely some, some subjectiveness in here of things that maybe kind of guide my perspective, but the actual trades that I'll be doing are systematic. And so that's how we're doing. I won't be touching on any of the macro things. I won't be touching on any like digging down on too many little individual things. It's mostly just kind of like my universe of the macro tradable assets that we focus on here. So that's what we're doing today. And yeah, let's get started here. So start from big picture. Okay, big picture S&P 500 on the top. This is a weekly S&P cash index. On the bottom here, we have the NYSE advancing issues. The symbol is ADV, Alpha Delta Victor. If you would like to have that yourself, some people ask me about that. It's a 10-week simple moving average of the ADV. So this is what the ADV looks like. So this is the NYSE advancing issues. This is what the simple moving average, 10-week simple moving average of that ADV looks like. I use this to identify buying opportunities in the market. When we get into the shaded area, generally speaking, this is where I want to be buying on weakness. When we get down to these dotted lines, this is about where market crashes, bottom reversals, major corrections, etc. You can see the last time we did that was the March, April timeframe, 2025 here, when the tariffs were hot and heavy, and so we were definitely getting signals that that was the bottom. And wanted to buy, of course, we did. And we kind of rallied ever since. We recently got back to that level the first few weeks of August, and last week we really just broke out of that range. So the idea, not so much to really focus on when you get down there buy, but look, I mean, what we're looking for is this is an area where we would be looking to buy if we needed to, not looking to sell. And in other words, any weakness that was happening would be reversed in that general area. So that happened. What the other thing we can do here is, let me bring this one up here. This is another tool I like to use. And so we use the SQN indicator to give us an idea of how overbought, oversold, how hot things are. When we get into this, is the blue area here is showing us that we are in a bull volatile range, and things are getting kind of heated. But this is actually the rate of change of that. Okay, so it's more of an indicator of it's an indicator of this indicator. It shows how fast we change over. And you can see as we got into the end of June into late July, we really started to it went hard, and then it's kind of eased up. And that this is the rate of change of the movement. And so it's pretty much cooled off. Even though we are in bull volatile, we did add to our long position on NASDAQ last week. So in other words, we are generally long equities. So let's get down to the individual side of S&Ps and the more tactical side of it. Okay, so this again, now this is a daily S&P 500. This is a continuous contract of the S&P futures. So it goes back to, the beginning of the contract, which is like 1992, maybe. Here we can kind of adjust it to, you can see this now at all. So we can go back, all the way. And so what I have on here, I have the volume profile of 2025, meaning this histogram on the side here represents the volume traded of the contract. and the levels that it was traded at. Where there's high volume, you can see this is a high volume area. Here at 58.35 is a low volume area. The highest volume, this dotted line here, yellow or green dotted line, whatever, at 60, 67.50, that's called the point of control, and that's the most volume traded at that level all for 2025. So the point of control where the most volume has happened is right there, and it's generally right in the middle of the volume profile. You can see it's, even though it's a little bit on the higher end, and that gives us more information. You know, if that point of control is down here or up in here, it gives you a little bit idea of strength. So it being, you know, on the top half of it shows us that, you know, the strength is within the trend higher. You don't really need volume to tell you that. Price pretty much has done it. And then, you know, the other thing we want to look at here is look at all these other areas that it has low volume. And you can kind of see where, see if I can, you can see where it has traded down to and filled up some volume, cleaned up some areas here in these low volume nodes. Okay. It uses high volume nodes as support. Low volume nodes is where volume, like there wasn't enough contracts really traded. So a lot of times these contracts will go back down and test that area to try to fill in that volume. And you can see that's kind of what it, as it was rallying up, it had all this low volume area. And you see this big volume spot here was eventually filled up here and filled up here. And so we built a good amount of support in there. And it seems that we've kind of just taken off from there. Now, the top dotted line here is the value area high and the value area low, this range. That represents 67% of all the volume for the year is up in this range. And we are slightly above it right now. So now we're going to take a look at the market profile. Just turn, don't really need the ATR at the moment. What this represents here is each little bar letter you can see represents a 30-minute time period where price has traded at that level. You can also see where we have that low volume node right here, from 65.70 down to 65.60 or so. So there is a potential area of, you know, back to the idea of like high volume is where price finds support. These low volume areas are prices where you tend to go back to. So we're getting a little tactical here on this, but what we want to see, a couple of things we want to see is we want to see prices find a level that you can see that the price basically open and like state there, you have a gap area. And so the next day it traded within that gap. So that's kind of like normal, right? There's a big jump and then like where does it find itself? This is the idea. And since beginning of September, you know, it's mid-September right now, it pretty much has been doing this thing called one time framing higher, meaning it's opening and closing higher on the daily. And so right now we have a bit of a trend, okay? And you can see we had one time framing higher up here, comes back down, finds areas that it needs to test, and then goes higher. So what this tells me is if we're going to have any weakness coming up, I'm going to pay attention to this area and this area because this is where price did not spend a lot of time. There's not a lot of volume there. So there might be some orders sitting and waiting. That's how we use that. Now it's just the technical or tactical side of trading. The other thing that we want to see is we want to see a clear bottom. A clear bottom is a price level gets hit and then instantly goes higher. So if you have a bottom where you have a single letter, an A, an M, an L, a C, or whatever, each one of those is just another representation of a 30-minute period. So A is the first 30 minutes, B is the second 30 minutes, M is like the last, or N MRN is the last 30-minute period of the trading day. And so what we see is a decisive bottom means you've gone down to a level, and within that same 30-minute period, that level was bought up. So this one right here, you can kind of see, see that's a single time frame. So this was a good bottom here at 65.52. Unfortunately, we have this one was not, this one was not, this one was not. So we have some reasons to start considering going lower. We also, it looks like there's another one, 6,300. So we'd be looking at 6,300, 6,425, 6,450 area, 6,520. These are all areas that could potentially go back and retest. So you want a decisive bottom, which you get here. But if you have these, they're called poor lows and poor highs. If you have those, oftentimes you want to go back and revisit. Price will go back and take a look. Okay. If this stops this one time framing higher, these are levels we want to start paying attention to. So we could go short with targets into here, or we could start looking for, maybe they're buying those positions up down in that area. Where would you want to put limit orders to get long, things like that. So that's generally what we're looking at right here. Going forward, I just wanted to kind of look at the tactical of this week go ahead of us. So we know we have FOMC this week. So if something surprises in the news conference or anywhere else and we get weakness, we could see moves down to 63.50, 64.20, 65.20 areas, all good areas to expect prices to, and also on these low volume nodes, to see prices retest, assuming, because all I can say right now is we are in an uptrend on this. And so until something changes that uptrend, we just have to consider that weakness is there will be weakness all along the way. And as there is, we want to be buying or looking at how things react into that. So let's get into our more tactical version of this by going through all the different sectors that we cover. So we were long Russell, we got long Russell, got out over here, took profits on that. We're still long S&P. We've got long Dow. We've added to NASDAQ this week. So as far as the large cap equities, the big indexes, we are long, long, and long, along with Nikkei. We're short the dollar, all these things. There is some potential setting up on the 2, the 5, the 10, and the 30 to the downside, meaning rates higher, the bonds go lower. But we are actually, MacroOps is long the 5-year, either the 5 or the 2. So there's no, so the directional trade has picked up on these, even though we do have a potential short setup. It's not super decisive. Like I said, we added to NASDAQ this week. We have been adding to our NASDAQ and S&P position since the April lows down in here, where we originally got long at 5,300. We're already like almost 1,300 points higher on S&P, and just got long Dow recently. Onto metals. I wanted to take a look at the let's take a look at 2025, and we have gold, we have the crypto market, we have Bitcoin, and then we have altcoins. Gold has outperformed Bitcoin and just crypto generally, up 49% this year. 39% this year, sorry. Bitcoin's up 13%, and the altcoin market is only up 8%. Why is this interesting? In essence, gold leads these other asset classes. So what I'm seeing is we should expect crypto, either in the form of Bitcoin or into the altcoins to really catch up to gold. I can't imagine a whole lot of people would be surprised if, crypto it's only up 8% right now, let's say on altcoins. If there's a bull market in crypto, I'm not saying you need to have an opinion that it goes higher or lower, but if it does go higher, I don't think anybody would be too surprised to see a 40% move on crypto. That's kind of a common situation. You can see crypto or gold had its big move into there, and then, Bitcoin catches up, and then also, let me just kind of draw it. First, you've got gold. Okay. And you see that crypto went down right in here. Then when gold tops out, you get the Bitcoin move. Okay. That's next. Then when Bitcoin starts going, kind of cooling off, then your altcoins get going. So it's this multiphasic relationship that we get. And so we're starting that new, as you can see, we are not putting in. So while gold is going higher, we can see that Bitcoin is mostly going lower. Alts are kind of sideways. So we would expect to see gold take off, then Bitcoin to catch a bit of a bid, and then altcoins to catch up. The only other option is that altcoins overtake Bitcoin and Bitcoin continues to go sideways. In either case, gold is typically the leader in this scenario, and it is leading right now. So let's get to our metals. And as we can see, we are long gold. We broke out of gold recently. We've been tracking this for, since May when it went into that sideways consolidation. We were mentioning that volatility started to narrow. We maintained that bullish position. And every time we came down to these trend lines and these key levels, it reacted up, even though it might have spiked below them. Or, you can see if you're following that original trend line, it broke below them. That's key because so many people believe in this magic line as if it breaks, it's done and I'm out. But that's not really what we're looking for. The magic line is just a magic line. It doesn't actually have magic. It's just people believe it has magic. What we want to see is how it reacts to that magic line. So that's why I call it a magic line, because it's, I want people to realize that we're talking about like magic here. We're not actually talking about like legit things. It's just perception. Perception is reality. So people see that line break and they're like, oh, that's it for the bull market. I'm going short. And so you get a lot of people off sides and they have to cover, right? And that causes this like artificial, you just banging around. Bulls get taken out, bears get taken out, everybody gets taken out. Everybody's like worn out by the time you get to the end of it. And as you get to the end of it, everybody has to chase. And that's what causes these big moves, right? So we go from 3360 to 3,700 or so, well over a 10% move pretty quick. We are still in bull quiet. So I don't think that means to me, that doesn't mean that we're really in a position to see weakness come in. The bull volatile top that we had did have its weakness. It did do what it's supposed to do. Came down 11%. So when you get into bull volatile here, you should expect like a 10 to 20% correction. We got that. In addition, we got May, June, July, 4 months of consolidation. So this is reset now. The neutral or the bull quiet market regime is neutral or is reset. And so we should be, until we see the next blue bull volatile setting on gold, we got pretty much, blue skies ahead of us here for a bit. Doesn't mean we can't like bang around for another 6 months or do sideways stuff or whatever, but we don't have major market tops anywhere in this area. Taking a look at silver, because it's same sort of thing, like it's been more of a trend higher, but all the way you can see, if we put this in here, this trend line here, it broke here and instantly this magic trend line that people were following, people got stopped out here of their longs and they went short, and then they get stopped out and then they get stopped out. And so you get everybody off the bus or off the train when it leaves the station and they have to chase to catch it. Similar sort of scenario here. We kind of topped out and now we're holding. I would say there's a difference in application here. Silver is less of a hedge on inflation and less of the currency and more of an industrial metal. So it has to be hedged out more so than gold. So it trades a lot more sporadically. Gold has these nice trends that can go because it doesn't have that artificial, not artificial, but it doesn't have that industrial offer on it to constantly keep the price at a level that you can, price into the goods you're using, electronics and whatnot they're using for that metal. So platinum is a similar sort of move, has similar sort of moves. Copper is an even more industrial metal. We are long copper, we are long silver, and we are long gold here at Microps. This nice move in copper has essentially done its 2R move. We still think that there is some upside to this. On to energy. Crude continues to be sideways action. I have nothing to say otherwise. RBOB, same jam. Brent, same thing. And Natty continues to be backward adjusted, all-time lows in a neutral market regime. There's no trade here. There's no trade in Natty. We are short soybean futures from over here and basically at break even again right now. It did break down a little bit, but never fully did anything. Corn looks like it bottomed in there, maybe. We'll see how it reacts up here. This would be a potential short to keep an eye on. Wheat continues the trend. Soybean oil futures, a little bit better of a trend down than the soybean futures itself. Cattle, feeder, and live cattle both finally topping out and starting to come back. Let's take a look at live. This is almost a Fibonacci type of scenario to look at, at 225, 220 levels to see how it reacts. So far, it's reacting off the 38.2. Now, I don't trade Fibonacci's, but people do. And you want to see what other people are doing to see, okay, is this bulls buying this thing? Like, this is a bullish scenario or not? That's kind of how I look at it. But we did have bull volatile on those, and so potentials for major market tops are there. Coffee. Now, I did not catch this move yet. I will be most likely looking to buy the open on Sunday or Monday, depending on how we do here. But this is the action: up, down, break. I'm probably going to be looking to own coffee, December coffee, somewhere in this area over here. Just barely in the neutral market regime. We should have a pretty good move there. I expected some volatility along these all-time high levels. Sorry, not all-time high, but those high levels, I should say, the recent high levels. So somewhere in here, I'll be looking to buy coffee. Cotton, nothing to do. Lumber, nothing to do. Okay. Currencies. I mentioned a couple weeks ago that we did have, let's adjust. Let's get the backward adjustment in on everything, so everything just moved. Now, we are very short the dollar, very long almost all of these. We are long Swiss franc, Canadian dollar, Mexican peso, Kiwi, and Aussie. And are we short yen? I forget. But of the 8 pairs that we are most active in, 6 of them we are in. I will point out that we did have this breakout that we've been tracking on Swissy, on cable, and on euro. So that trend line across the board for the major currencies, the largest currencies, they have broken higher. Okay, Canadian dollar is a different one. It's we are long, but we're eating getting kind of churned out of it. Um, Mexican peso continues to be the strongest for us, and we are now up to those key levels that we were looking for. Actually, the key level that we were looking at was back adjusted here. So the breakout here happened on Thursday. Friday continues, or the continuation. We have gotten into bull volatile, so it's kind of a hold your nose sort of trade. We continue to trail this thing up. New Zealand, the Kiwi, we are long, and we got long over here. We're doing pretty good. We're looking to take profits up in this area right here. Aussie has been a lot stronger than Kiwi, and we are along that. Now, in this environment, we want to start getting into single name trends, and so it's not always that we do it. Like, yes, we could have been long Oracle, we could have been long Nvidia, blah blah blah, all these other things, Amazon, Google, whatever. We only do it when we have like the proper setups. Tesla has been in a proper setup. We got long over here at 340 or so. Last week is when it really started to take off. So another 60 points higher, 20% move higher from our entry. I have about a $600 price target for this move. So almost a 100% move for us. If it gets there, that's going to be one. We got into Apple, and it has been banging around our entry here at 230 or so, 229. Kind of took off, came back, retested, and there we're in the neutral market regime. So, it is expected to be kind of low, slow to get moving. Finally, we got long Cloudflare last week on this break over here. We did get our Swing Beast long signal. It's not going to give it to us here. But we did get a buy signal here at the 216 level. Made it up to about 228, back down 221. So I would like to see, continue to let Cloudflare do its thing. We have an all-time high contention over here. I think it's somewhere like 216, 221. Yeah. And so we got above it. So likely what we're going to see here is you get that blow off top. It looks a lot like, you go up, you come down, and then break. And so, we've done the up. Now we're coming down. So if we find support back in here, that should send it higher. That's another one we're in. As far as the individual equities that I'm tracking, now Brandon is in quite a few, especially in the mining space. So you've seen how strong the metals have been. That's why he's been so hardcore into them for the year. And yeah, we're in the mood to get moving here. So Brandon's pretty set up. On to crypto. No sell signal. The buy signal started October, November 2023. We are still long. So we're long a bunch of different cryptos. Our little more tactical got us long 93,000 earlier this year in April. Again, still long. So if we come back to look at our rate of change indicator, you can see that it's been beaten down while we're hanging out at all-time highs. So it's consolidating up in here. Ethereum, however, has been a lot stronger. We did get a peak right in here. The peak we're really interested in is like the way up here. it could be, you know, up in here, up in here. Any of these levels are major peaks that we're going to be paying attention to. We are nowhere near that yet. 230 on the rate of change would be like a blow off top initial, but this could get all the way up to the 800 level of the indicator, which probably could be like 15,000, 20,000 Ethereum if that actually happens. So finally on crypto, let's take a look at it. It's called Total 3, and this represents the all the cryptos minus Bitcoin, Ethereum, and Solana. So this is altcoins, and they are at all-time highs right now. So alt season, as we know it, is on. We should expect volatility to really start hitting these altcoins and really start to move. Things like BNB USD has been doing a really good job. But again, even though it's really high up here on this rate of change, historically speaking, it's nowhere near there, even though price is at all-time highs. So again, for generally speaking, as we head into the end of or the last half of the I don't even know if we want to call it last half of this next phase of the crypto bull market, we should start seeing altcoins, so non-Bitcoin, non-Ethereum type, well, just not Bitcoin, really start to take off. And generally speaking, the price discovery, I'm projecting about a 400% gain for the overall, anywhere from 100 to 400% gain for the overall altcoin tickers. So not Bitcoin, Ethereum, Solana, Sui, blah, blah, Binance, Hyperliquid, like all of those, I'm expecting probably a 100 to 400% move. Some of the other smaller ones could have multi-1,000% moves. To Bitcoin, I don't have much clarity, but or of an opinion, I guess, is probably a better way of saying it. But I would say something, we're certainly going to continue to be long crypto. The crypto trading system we run has really been doing a good job keeping us in. Again, it got us in all the way back here at like the $30,000 level on Bitcoin, which is 115 right now. It's been, we've already ran up, somewhere like, 800% gains since then on the system. And I'm saying we should have another couple of big runs on the system, on the crypto momentum system. For those of you who are who haven't got or do have the crypto momentum system, we will be I will be running an algorithm that will start sending trade alerts to the subscribers of the momentum system. And that's, I believe, macro-ops.com/crypto. But yeah, you can find it on our website if you want to do it. Hit me up, see if you got any questions. I believe that's it for the week. Big FOMC this week. So, all of this could be good, bad, or otherwise. That could change a lot of things. But right now we're positioned, and I guess we're up somewhere over 32% on the year for our system. Let's just see what S&P is up 11%, so 12%. So we're basically 3x. We're 200% higher returns in the S&P 500 on the year. And our volatility is substantially less than the S&P 500. So we're doing what we do. This is what we do at MacroOps. Have a wonderful trading week, everybody. Thanks for stopping in and watching, and I'll see everybody this week. Bye.